Hello everybody, my name is Andrew from Stock Money Lizards, and today we're going to be discussing some technical indicators that are signaling a potential price increase in the price of Bitcoin, along with the EMV Z-score, which is an on-chain metric, which is super interesting, with the transition from 2022 into 2023 and how this plays on the psychology of the investor. Cool, so let's jump right into it. Over here, we see the CMF. The CMF is a technical indicator that measures buying and selling pressure in a stock or other financial instrument. It does this by looking at the volume of trading and the difference between the closing price and the high or low for a given period. The CMF can be used to identify potential buying or selling opportunities as well as to confirm trends in the stock's price. To calculate the CMF, we take the sum of money flow, which is the difference between the close and the low for a given period, and divide it by the sum of the trading volume. This number is then multiplied by the period's trading volume to give a value that can be plotted on a chart. The CMF can be used in a number of different ways. For example, when the CMF is above 0, this could potentially suggest that buying pressure is stronger than selling pressure, which can indicate an upward trend in the stock price. On the other hand, when the CMF is below 0, it suggests that selling pressure is stronger than buying pressure, which can indicate a downtrend. It's important to note that the CMF is a momentum indicator and not a leading indicator, meaning it would be beneficial to use in conjunction with other indicators to gain more insight and make a more informed decision. CMF is short for Chaikin money flow and is a technical indicator that can help you identify buying and selling pressure. So now that we're seeing this example, essentially what we're looking at is when the CMF comes up to 0, then we have a buying and selling pressure, which is more or less neutral. Once it pushes up above 0, what tends to happen is price starts to go up. When price starts coming down on the asset that we're looking at and the CMF is also dropping, that signals that price should continue to fall. Whilst when price does continue to fall, and the CMF takes a 10 and we end up with some bullish divergence, then this could be an indication that selling pressure is coming to an end. CMF is marking us close to the 0 mark. And once we take off from the 0 mark, then we could set ourselves up for a nice bullish trade. Same thing happened over here. We had price more or less remaining neutral with moments of increase. We had bearish divergence, signaling that the bulls were losing momentum and the bears were once again gaining. And once we went back down to 0, we ended up with a negative CMF coming down. And what happened was price followed. So this is something we're going to be looking at and jumping into with regards to Bitcoin. So where are we with the CMF? So currently we're at a level of 0.09. Now we're looking at the weekly time frame here. So if we just draw out a nice line at the current CMF of 0.09, what we can see is that we are breaking out of the falling wedge that we discussed in the previous video last week. And we have bullish divergence on a falling price. So this could be the signal that we were looking for to identify that selling pressure is exhausting. And now we are starting to head closer to that 0 mark. Once we head close to that 0 mark, chances are if the CMF continues to increase, momentum will increase to the upside. Now, let's go back in time and see what happened. So at this position, keep in mind, we're breaking out of a chart pattern, which is the falling wedge pattern. At this point, we were experiencing a negative CMF and a negative price. So logically it makes sense that the price keeps on falling, and that's exactly what happened, calling this top quite well, which then led to a massive price decline. Now, if we track back, and we look at this position over here on the 13th of July 2020, let's just increase this. So at this point, the CMF was at 0.008009, where we're at the moment. We were also breaking out of this inverse falling wedge, which we discussed in the last video. And what happened was we're breaking out of this inverse falling wedge, and we had a nice price increase from 8K to 10K before consolidating back down and then moving back up quite violently, which led to a positive run on the CMF. Now, if we look back at 2019, we were once again at this level. We had bullish divergence on the CMF. We had downward price movement, but the issue was we were still in this chart pattern. So what we can see is that price did increase slightly also, but then it took a nosedive down. If we look back 2019, we are also breaking out of this upward triangle at the same level. And then we made a nice run on the CMF and we made a nice run on price. Continue moving backwards. Now, if we go back to 2016, we were at this level of 0.08, 0.09. And what happened is we ended up going up. There was one other time where it was in 2015, where we're also breaking out of this wedge, which we actually identified as a similar position that we are in today in relation to the 2013 bull run and the consolidation back down to lows in 2015. So something interesting, we touched these positions 1, 2, 3, 4, and now 5. And the reason why I'm saying now 5 is because, yes, we did touch it here, but the CMF was on its way down and we didn't have bullish divergence. Yes, we did touch it here, but CMF was on its way down. So this is the interesting part to us. Now, what we can see is that in 3 of the 4 situations, we were actually breaking out of this wedge, which is the current wedge that we are in, the falling wedge. We're breaking out of the inverse falling wedge. We were breaking out of a upward triangle. And we're breaking out of the 2013 falling wedge, which we just had a look at. So this is quite interesting because it seems that whenever the CMF experiences a level of 0.08 followed by bullish divergence in the CMF, price does tend to go up. So this is just one indicator that is signaling that Bitcoin could actually see a nice price increase. Now, I want to jump into an on-chain metric that I find super useful. It's called the MVRV Z-score. Basically, the market cap less the realized cap all over the standard deviation. Now, what's cool about this chart is that in the past, it has actually timed bottoms perfectly. So whenever we are in this range over here, that is a signal that we are in accumulation phase. And in accumulation phase, if we buy at these prices, then we'll probably end up benefiting from the price increase. Assuming we're in this level, this called this low perfectly. This called this low perfectly. Is this gonna call the 2020, 22, 2023 low perfectly also. So basically what this chart is screaming is we are in currently accumulation phase, and we discussed this in the last video. So what you can see is this line basically goes up to the Bitcoin chart, and as you can see, that was a low. It was a 3.5 low of the pandemic. You have an accumulation phase there, 1. You have an accumulation phase here, 2. This was the breakout from the 3000 level, which also matches with the CMF, which we just discussed. You had a long, extensive period after 2013 where we hung around in this area for quite a while, which also matched to the lows before experiencing a nice run up. And finally, this is quite old data where we were in this level in circa 2012. We actually breached below it, and sort of that marked the low for Bitcoin price back in 2012. So this is the MVRV Z-score, and all it is saying is that it's confirmation that we could possibly just be in an accumulation phase, and we'll keep track of this chart because once we break out of it, we could potentially see some nice price increases. Also, on the flip end, it has a really good track record of identifying tops. So whenever the MVRV Z-score is equal to anything higher than a 7, then that statistically is a good time to take profits. So we had this moment in 2021 where the price was touching about 60K. We had this moment where it called the 2017 top perfectly, and it hit 9 on the MVRV Z-score. And then we had situations where we overshot and we hit 10 and 10, and it basically hit the high March 2013 and this high in November of 2013. And again, over here in this area where we hit 7, hit this high perfectly. So basically, we'll keep track of this MVRV Z-score because it's quite interesting, and we'll try and time our entries and exits using this on-chain metric to help us understand more. So I just want to change the subject slightly, and we posted this really cool chart, which is a chart that identifies the month of January in 2012, 15, 18, and now 2023, and basically gives a really interesting representation of what a new year looks like after a bull market for the price of Bitcoin. So as you can see, in 2013, we ran up and we sort of made those highs. Then we came back down over a year and a half. We made these lows, we turned the year, and we ended up on a nice run up. Same, we hit the 2017 high. We made a low, and in 2018, we started our run up, came back down, went up, and now we are facing the 2021 high, coming back down, and now we're sort of at the low. So the past is not always a good reflection on what is to happen in the future. However, if you do look at the past, in 3 separate situations preceding bull market, January has always been a good month. Now, the reason why January is probably a good month is tax loss selling. Tax loss selling is essentially when an investor sells an asset to eliminate or lower capital gain realized for income tax purposes. And we experienced this over the transition from 2022 to 2023. And you also have new motivation, you have a fresh outlook on the market. So there are a number of psychological reasons as to why the January that is followed after a bull market does well. So if we just now jump into the Wall Street cheat sheet, there was some interesting debate by some analysts as to where we're at the moment, and I'd love to know in the comments where you think we are at. However, it could be that FTX was the moment where we went through our anger phase and it left us in a bit of a depressing state that potentially can now start leading us into a sucker rally, a rally of disbelief. Yeah, but the price is going up, it's going back down, it's going to make new lows, it's going to hit 10, 12K, it's going down. I mean, we've had all these before, and technically they can be right. However, they can also be wrong. So we'll keep an eye on this. It's important to track the psychology of a cycle because we can better prepare for the future. If we are transitioning from anger to depression state, then what follows is a possible rally, which coincides with the CMF that we just spoke about, the breakout of this falling wedge. So there's every reason to believe that we might experience a nice rally moving forward. And what is likely to happen then is we'll probably go back down, disbelief. So this rally will fail like all the others, blah, blah, blah. And then sort of we move into hope phase, optimism, belief, thrill, and then euphoria. And hopefully at euphoric state, our MVRV Z-score will tell us, listen guys, it's time to take some profits and enjoy all the hard work and the patience that you have put into this run. Cool. So this has been the update from Stock Money Lizards. My name is Andrew. And should you have any questions about the current CMF level, the MVRV Z-score, the transition from a bull market to a bear market, flipping from the old year to the new year, and how we perform in the past and how that could move forward in the future. And I'd love to know where you think we are on the psychology of the market cycle and the cheat sheet. This is not financial advice. This is just commentary on what we at Stock Money Lizards think is happening with the current market. Also, please let me know of any altcoins that you would like to have a look at so that we can have a look at them and commentate on them too. Once again, this is not financial advice. Please do your own research. This is purely just commentary. Thank you for listening, and we'll catch you next week. Bye.